Hello, everyone, and thank you for joining us for the next edition here of our webinar series, where today we're going to be talking about the current franchise sales and marketing trends that are happening and what we're seeing going on in the whole wide world of franchising. And we've got a lot of data and information to share with you today. One of the things as guests are loading in here, first, by the way, make sure if you're new here, if this is your first time, please note these are live sessions. So if you have questions, feel free to raise your hand or to type something into the chat box so that we can go ahead and answer those questions as they come through. But one of the things that I'd like to highlight here, I'm going to share my screen for a quick second, is if you are interested in learning more, just to give you a quick promotional plug for our upcoming franchise sales and training workshop that we have coming up. It's next week on Wednesday. It runs from 11 a.m. to 6 p.m. Eastern. It is a live event done virtual through a Zoom session, kind of like this. And it's something, if you're a current client in our process, reach out to your primary contact here and let you know, for most of our clients that we're helping franchise, it's part of your program, part of your package. So there's no cost. If you are looking to get that extra bit of information for your own franchise sales to help maybe increase conversions, or maybe you have a new staff, or you're just looking for a refresher, it's a great course. You can register online at franchisesalesworkshop.com. It's only $1,500. And by the way, if you're interested, you can just register right away, and you and anyone from your company can participate. So if there are multiple, it's just a one-time $1,500, and you're able to participate, and you get almost 135-page workbook that comes along with that. So just a quick plug, you go to franchisesalesworkshop.com, you can hit register now, and that will take you right into this checkout page that you can just go ahead and sign up and pay right online there. So with that being said, I will take a quick look here. Let's see who is on our session, see if there are any quick questions. We've got a bunch of folks here. As just a quick reminder, a couple others loaded in. If you do have questions, feel free to type in the chat box, raise a hand. We've got a live group. We've got a lot of content. I'm going to move quickly and start going through this. So if you're new to our session, I always like to start at a macro level to start talking about what all is happening in the whole wide world. So our first screen I'm going to share is from the Purchasing Managers Index report through the Institute of Supply Chain Management. And I love this report. It's on what is happening in manufacturing right now. And this is an important statistic and things for you to be aware of because as we talk about, manufacturing is a leading indicator. So it tends to tell us what we should see forthcoming in the economy over the course of maybe the next 6, 12, 18, 24 months. So this is a leading indicator in terms of what's happening. So and you can see here, PMI is at the Purchasing Managers Index report is at 58.6%. So I'll read this little blurb here that's right on the site. And it says manufacturing grew in February as the manufacturing PMI registered 58.6%, 1 percentage point higher than January reading of 57.6%. The manufacturing PMI continued to indicate strong sector expansion and U.S. economic growth in February. All 5 sub-indexes that directly factor into the manufacturing PMI were in growth territory. The new orders and production indexes remained at strong levels. And just reading this, just so that you know, 50% is basically the manufacturing break-even line, and 48.7% is the break-even line for the entire economy. Bottom line is things are looking really good. It ticked up a little bit in the month of February, which is great, all things considered, certainly with that huge spike that we had seen in January with the coronavirus stuff and people being concerned about that and everything that was going on. So just something for you to be aware of. And when you're talking to prospects or sharing with them, if they're worried or nervous, this is a report that you can share with them to show positive things happening, that things are looking favorable as a whole. This is a second report by the Purchasing Managers Index. This is on the services industry. Now, certainly, as you know, the services is the largest sector in the American economy. And this is a great report for the Purchasing Managers Index. It shows that 56.5 So in February, the services PMI registered 56.5%, a 3.4 percentage point decrease compared to the January reading of 59.9%. The 12-month average is still at a huge number of 62.6%, which reflects consistently strong growth in the services sector. This is the lowest services PMI reading since February of 2021. The February reading indicates the services sector grew for the 21st consecutive month after 2 months of contraction and 122 months of growth before that. So certainly we might be able to look at this and see that there's a little lagging happening in the services industry. My speculation, again, I'm speculating, but I think that it very well has to do with the fact that we saw a lot of people who were out sick in January and February, maybe part of the holiday hangover a little bit, and a lot of factors factoring into it. Nonetheless, it's still in the growth positive territory. So all good things. We do want to pay attention to it as we see this trend. We see December, January, and February. We see it declining here. So just something for us to pay attention to. Now, just do note that this reading here from November of 2021 was the highest reading on record for this report. So this is an all-time high here. Just interesting information for you to be thinking of. And now let's take a look at their hospital report. This is the Institute for Supply Management report on business, and this is their hospital report. And you can see hospitals dropped down 7.2 percentage points dropped from January into February, but it still indicated the 21st consecutive month of growth. February reading is the lowest since January of 2021. Business activity index decreased in February, while the new orders index fell into contraction territory for the first time since January 2021. The employment index expanded for the first time since June of 2021. So you can see it's kind of a little bit of a mixed bag in the hospital sector. Certainly it's been large, lots of things happening. And I think you can kind of speculate a little bit from this here that given the fact that the coronavirus buzz seems to be subduing, cases seem to be on the decline, and we'll talk through what's going on with the coronavirus stuff here shortly, and how that is impacting things as well. So just to kind of give you a quick idea of where we're going, and since we're talking about coronavirus, I might as well jump ahead to that. So what is happening? It seems like news and coverage of the coronavirus was like a light switch. It was here yesterday, gone today. I have not seen really anything in the headlines, albeit I don't watch a lot of news or pay much attention to some of the everyday news stuff that's happening. But it is worth noting it has really disappeared the last probably 3 weeks, and you may be seeing that as well. And so these are daily new cases in the United States. This is from the worldometers.info website. I love they make it really nice and easy. The blue line is a 7-day moving average so that you can see as of yesterday, the rolling average, 7-day average is about 30,500 cases. You see that big spike in January and into early February where it started declining there. So just some things for you to think of and see how it's really coming down. It looks like it might be leveling off here a little bit this week with cases. And then the other thing for us to take a look at, because cases is one thing, but what do deaths look like? Certainly it is a little morbid, but just something for us to be talking about and be aware of. So you can see the spike of deaths. Fortunately, in the month of January, while there was a huge spike here, you can see this giant spike in people being in new cases for the coronavirus. New deaths did not spike nearly at that same rate, which is a good thing to see. And we see that deaths are on a decline here as well, which are all positive things to see happening here. So that's the coronavirus situation. Let's talk about the Federal Reserve raising or increasing rates here. This is the Wall Street Journal article. It was updated this morning at 2:40 a.m. It's called Fed Raises Higher Interest Rates. Let's see if we can, Fed raises higher interest rates for first time since 2018. So as we scroll down here, we can kind of see what this is looking like. I thought of important note here was this paragraph. Officials signaled they expect to lift the rate to nearly 2% by the end of this year, slightly higher than the level that prevailed before the pandemic. hit the U.S. economy 2 years ago when they slashed rates to nearly zero. The median projections show the rate rising to around 2.75% by the end of 2023, which would be the highest since 2008. And this chart here shows since about, looks like 1999 or 2000, where the rates and rate increases were. So you've got the dot-com bust here, where rates really fell down. Rates increase up in the 2000s, and then you have the real estate crash here. It drops down, is way super low for about 6 years. It starts ticking back up in 2016, and then certainly when the coronavirus hit, things dropped, and now we've got this uptick again. All hopefully will try a little bit to work on this inflation issue, which is next on our topic here. And the U.S. Chamber of Commerce released a great graph showcasing what in the world is happening with inflation, which is something probably all of you are thinking about. And if you're not, you should be. And how does this inflation, these rate increases impact franchise buyers, by the way? Just to talk a little bit about that, when you're talking to your franchise prospects or interweaving this into your franchise sales presentation or into your marketing, reminding them that every single day they wait to do something, inflation continues to go up. The value of their dollar continues to go down. And that's a problem, especially, and we're going to talk a little bit about this shortly, about how franchisees are funding this. So with the Fed raising rates, that means it's going to cost more to borrow money. The value of your dollar continues to go down because of inflation. That means every day you delay whatever your investment is, the less buying power you currently have. So it's something that you should be talking to your prospects and candidates about. And it's not to manipulate them. It's just to tell them that if they are going to do this, they are far better served to start today rather than tomorrow, just simply due to the fact, due to the continued cost of your value of borrowing money, or the inflationary rates happening here. And this chart by the U.S. Chamber of Commerce is really interesting to see here, that you see the annual inflation rate change. And look at here, this is June, kind of this middle part here, June of 2021. And then we see this huge spike the last 6 months here that we've been going through. And we see that it's at almost 8% inflation. And we don't see that going down anytime soon. So this is the highest annual inflation rate since January of 1982. So it's been 40 years since that's happened. So just things for you to be aware of. If you're not adjusting your prices or considering adjusting your prices, I'm certain or maybe talking to your franchisees about adjusting their prices, because your suppliers probably have gone up or vendors are going up. Something to be thinking about, just to try to hedge and keep up a little bit with what's going on here. All right, so let's jump into one of my favorite charts as of late, which is the U.S. Census Bureau's new business formations that they track. So these are all of the applications for employer identification numbers filings through the IRS for Form SS4. Business formation series is described employer business formations as indicated by the first instance of payroll tax liabilities for the corresponding tax business applications. And so this is really, really neat to see. We saw in last month in February that a total of 419,518 business applications happened. What I really like to showcase is, if you look back on this chart here with the orange and gray pieces on it, we see that back in 2011, trending on up to right before the pandemic hit, you see this trend from about 200,000 business startups a month, trending up to just under and right around that 300,000 number. We saw a dip when the pandemic first hit, and then just an absolute huge surge of activity, over 500,000 applications. And this has sustained. I mean, you can see this is over 400,000 business applications are happening every single month. And what does that mean for you? What that means is people have business startup on their brain. And while all of these are not buying franchises, they are thinking about starting a business. So be thinking about how your franchise can solve this problem for these people that are looking at starting a business. I think there's a really telling sign that we have people interested in doing something for themselves. And the Franchise Insights, which we're going to dive into next, franchiseinsights.com, really reminds us with some of their data that franchise candidates really are looking to be their own boss. That's a number one driver. So if that is not interwoven into your messaging somewhere, you should really be considering that as you are thinking about it here. All right. Speaking of the franchiseinsights.com, let's take a look at their small business startup sentiment index that they run every month. It's a fantastic report. I love taking a look at this so that you can see what are these prospective business owners and franchise folks thinking about right now. What is important to them? So if we look on the far right of this graph here, the question that was asked is now a good time to start a business? And if you look at the green is agree and the blue is strongly agree, it shows that in the month of February, 73.5% of people that were thinking about starting a business think that now is, in fact, a good time to be starting a business. 73.5% of them. So that means they're thinking about doing this now. So make sure your marketing salespeople are talking about this, that now is a good time. And certainly couple that with the inflation discussion and with the ability of borrowing money. Borrowing money is going up. The Fed has shown that they intend to raise rates up to 2% this year, which means money, while it's still going to historically be relatively low to borrow and to borrow funds, the rates are going up. It is going to cost more. So it's just a point to talk about. So we look at people that are thinking about wanting to start up their business. This is the startup in the near term. This green line is that people want to start this month. So very high percentage here for startups this month. Startups within the next 3 months was at 57.4% of respondents said they're looking to start the business between now and so basically the next quarter that's happening. Let me pull this up. This is one I really like to take a look at. So which of these factors, I'll zoom in a little bit so we can see this. Hopefully you can see that better. Which of these factors will have the biggest impact in the next 6 months on your decision to start a business? And so we're looking all the way in this colored rainbow of lines, and we're looking all the way to the black line on the far right. And as you can see, the number one contributor to having the biggest impact on your franchise buyer's decision to move forward is funding or access to credit. 73.5%. And you can see how consistent that number has been even over a rolling 12-month period or 13-month time frame here. You can see that it consistently has been around that 75% number, 70, 75, maybe it dipped a little low, popped up here a little bit, but you can see it's right around that number. What does that mean for you? That means if you do not have funding in place for your franchisees or lenders or people that you can direct your franchisees to support them to get funding, you're probably not addressing their biggest concern. How am I going to fund this? So note that 73.5% are wanting that. Look at economic climate. And what I like to point out, even during the coronavirus and everything else that's been happening, it never exceeded the interest in funding or the concern about funding. So you can see as the coronavirus situation, you can see it's largely trended down the last course of the last year, and it's at 35.7%. It says economic climate, which could be anything. How are you feeling about the economic climate? So the good news is that just over a third of the prospects you're talking to, so 1 out of every 3, that economic climate is going to be a concern for them. So that's your second highest category to be talking about, which is part of why we do this session here, to give you some data, tools, ammunition, whichever description you want to use to help educate these buyers about what is going on. You have 10.2% on the stock market, 13.3% on political changes. You see a little spike here that happened in February. It was trending down. It spiked up here a little bit. Maybe that has some tendencies from what's going on with Russia. I don't know if the Russia-Ukraine situation had happened by the time they took this report or assessment. Regulatory laws, so you can see everything that's trending there. But I always like to take a few extra minutes just to talk about that. Here's one. How does COVID-19 affect your interest in business ownership? No impact with this far left one. The black line here shows no impact. This is an issue that will be resolved before I start my business. 30.6%. That's the highest this number's been in over a year, which is really interesting. Boost my interest. That has reduced. Makes me favor businesses that would be resistant to this kind of thing. Huge drop in February, down to 19.4%. So if you're in a business that is maybe it could be susceptible to impacts from a coronavirus type scenario again. Look at this. Look at January and December were huge spikes over. It looks like almost 50% of people were worried about that. And now it's dropped down to less than 20% from February. Certainly, as you can see, those numbers for the coronavirus that we talked about had gone down. So I think this is important information for you to know. So if you're in a business that was pretty impacted from coronavirus, that means that you prospects, over 80% of the folks that are inquiring, 4 out of 5 leads that are inquiring, they're not that concerned about your business being maybe slightly more susceptible than others. So I think I'm looking at it from the opposite standpoint of what this question's asking, which is it makes me favor businesses that would be resistant to that kind of thing. So 20% are looking for that. That means 80%. It's not as big of an issue for them. So I think that's a really good thing for you to see as you're going through this. All right, let's take a look at Google Trends. We haven't pulled this one up in a while. So I just typed in buy a franchise and what's going on with this term over the course of the last 12 months and where are we today? So what's happening? So you can see here, this is January, right around January 1st on where my cursor is on the line here, January 2nd to the 8th here. You can see that it kind of dipped down in fourth quarter a little bit. And then we see it really start spiking into January, and it was at 97 here for February. So the all-time high, this is 97% of what the all-time high was during the search range, which is the last 12 months. The highest point was August 15th to the 21st for the highest search for that term. And then back in late March, we had 2 big booms, late March into early April. So if we maybe can say maybe there's going to be a trend here. We saw a big spike in February, a little drop into early March. Hopefully, we see another big uptick here in late March as we're coming to the last half of the month, the last couple of weeks of March already. And then interest by region, we have Nevada, Kansas, Utah, North Carolina, Tennessee, Georgia, Texas, Louisiana as the top 10 regions or states that prospects are typing in this interest, typing in those key terms for buy a franchise. And by the way, so if you're in marketing or wondering, these might be states that you want to be targeting. If you're not considering Nevada, Kansas, Utah, Arizona, which by the way, the Franchise Expo West or West Coast Franchise Expo is happening in Phoenix this weekend. So Friday and Saturday, we'll be out there. If you will be, we'd love to see you. Stop by our booth. We'd love to say hello to you. But you can see these top 5 states or top 10 states for interest. If you're not considering these states, you might want to consider it. This is where interest is happening right now. So here's the thing we were talking about, SBA loans. Franchise Insights found, this is a really cool study. I'll zoom in a little bit here. It says SBA loans and personal savings are top 2 sources for expected funding business startups. So the top 3 funding sources for starting a business, and this literally just came out. They published this March 16th. So they published this yesterday. It's as current as this can be. Happy St. Patrick's Day, by the way. And you can see on here that number one is the small SBA loan, 48.9%. Almost half are thinking about SBA loan. 45% will be personal savings, and banks or other loan providers, 38.9%. You can see those top three far above and away are the largest chunk of how franchise buyers are thinking about starting up their business. And here's an interesting breakdown. They lumped categories into personal sources, and they this is interesting. So by aggregating, I'm just going to read from this report here. It says, by aggregating sources into two buckets, we see that entrepreneurs are assuming that about 1/3 of startup capital sources will be personal. The remaining roughly 2/3 of sources will come from outside their balance sheets. Other sources were excluded from this view. Personal sources for this analysis include personal savings, retirement funds, 401k or IRA, credit cards, cash value insurance policies, and liquidations of securities. Though home equity lines of credit are technically a loan secured by the home, it was included in this analysis since it represents the buyer's equity. Outside sources include the SBA loans, banks and other loan providers, franchisor financing, venture capital, angel investors, and friends and family. So what does that mean to you? That means that roughly 2/3 that your buyers that are coming in, they're planning to fund their franchise expansion efforts with about, or opening or buying your franchise. About 1/3 of their funding will come from personal assets, and the other 2/3 will come from outside sources, banks, SBA, friends, family, et cetera, on where that's going to come from. So if you don't have a clear or great solution or option for that, if this is not an indicator, if this doesn't tell you that you need to have something, I don't know what will. So make sure that you keep that top of mind as you're considering this. All right, let's take a look at prospects. This is another one by Franchise Insights, and the heading is Prospects Rank Desirable Characteristics of Franchises with Surprising Results. So this was at the bottom of the chart here. It says, or the heading of the chart is, which franchise characteristics are most important to you? And the bottom of the chart says weighted average of importance responses ranked 1 through 8. So they did a weighted average and allowed people to rank which are most important. Low cost of entry was number 1. Higher earnings was number 2. Extensive training was number 3. Flexibility of work was number 4. Well-known brand number 5. Pandemic number 6. Systems was number 7. And ability to work from, I would guess maybe work from home is maybe what that's asking, as the last one there. So if what's interesting is, for newer or lesser known franchise brands, well-known brand is not as important. That was right around half, 50%. It was that 4th or 5th on the list. If you are a well-known brand, this tells you this is that franchise candidates are not quite as, while it matters, it's not the most important thing. So talking about being a well-known brand is helpful, but you need to make sure you're talking about these other things. So talk about low cost of entry. Even if it's a high initial investment, can you reduce the amount of cash in some way, shape, or form? Or if you have high earnings potential, or if you have comprehensive training, make sure you're highlighting those areas. If you have any of these top 3 any one of these top 3, make sure these are what you're really focusing on when you're talking to prospects and going through that. So I just think that's a really important note. A couple quick categories before we close out to some Q&A or get to any questions or comments that we have from folks. So this is franchising data by category. So the following franchise categories show the greatest inquiries on Franchise Ventures platform of websites and mobile apps in the last 90 days. So here are the percentage of total franchise inquiries by category. So if you see home services is still crushing at 20.4% of all inquiries, that means 1 out of every 5 leads coming in, or maybe we'll just use out of 10, 2 out of 10 coming in are home services inquiries. Senior and healthcare, 13.4%. Business services, 12.1%. Food and restaurant, 11.1%. Cleaning and maintenance, 10%. And then a big drop off after cleaning and maintenance. Health and fitness is on the rise, though, folks, 5.1%. Financial services, 5%. Child related, 4.9%. Retail, 3.1%. Pet services, 2.8%. So if you see, especially in these top five, home services, senior and healthcare, business services, food and restaurant, cleaning and maintenance, if you're in these categories, you are in demand right now. You are top of mind for franchise buyers over the course of the last 90 days. Franchise buyers, I think this is the final one here just to talk about. This is franchise opportunities by cost. While franchise opportunities are available to suit any budget. Oh, this is in 2020. Inquiries fell into the following ranges that represent liquid capital. So this is from 2020. We talked about this last month, I believe, but just to show that the amount of liquid capital that someone has to invest. So really, you can see here that most candidates are looking for something that they can start up that has between $25,000 to $100,000 in liquid capital requirements. So if you're thinking liquid capital or maybe personal assets based off of this previous sheet here, we can see that, okay, about a third. That means that prospects are looking to spend between, if we say that's a third and it's 2/3 loans or other, then we can take a look at this data and say, well, our candidates are looking to fund somewhere between roughly about $75,000 up to about $300,000 in startup. So if your initial investment is going to range somewhere between that $75,000 to about $300,000 range, you're kind of in that sweet spot of where most of franchise candidates are looking. And when I say most, I mean, if we add these up, that's 50, 80, 82, 80%, just over 80% of the buyers are somewhere between that range. So that is the presentation here. Thank you all for hanging in and sticking with me for the show, or the presentation here. Are there questions, comments, ideas, thoughts that you'd like to share before we go? Feel free to type it into the chat box or raise your hand. I'll unmute you if you'd like to go ahead and ask a question there. I'm not seeing anything come in. Feel free to type it in while I'm closing this out here. But as a reminder, we will publish this here within about a week or so is usually when we get it up and live on our YouTube channel. So if you haven't subscribed to our YouTube channel, go ahead and do that. At Big Sky Franchise Team is our YouTube channel. We're publishing 2, 3, 4 videos every week and content. We've got lots of things going on. And if you have not subscribed to our podcast, go ahead and take a look at that at Multiply Your Success. Thanks for being with us today. I'm so glad and thankful for you tuning in. Hopefully you grabbed a nugget or two of information that you could apply to what you're doing. And remember, we do this every single month. So we'll be back in the month of April, seeing what's happening in the whole wide world of franchising trends, marketing, and things that are happening to share with you there. Have a great week, everybody.